In late 2018, I invested about 10% of my total portfolio into Facebook stock. At the time, investors had really beaten down the share price. It had dropped more than 30%, and the headlines, they were not looking good. It was around the time of the Cambridge Analytica scandal. But with it being beaten down and the future still looking pretty bright, I thought the risk to reward was way too good to pass up. When I bought in, I shared some insight into why I put so much of my life savings into just one company. And I've recently done the same with Alibaba stock. I also shared 2 big Facebook stock predictions. I predicted Facebook would start paying dividends in the next 5 years, and in the next 10 years, the market cap, which was around $410 billion at that time, would more than double to above $1 trillion. In less than just 3 years, Facebook's market cap has already topped $1 trillion, and I'm up about 140% on the position. I have some nice capital gains, and I thought it'd be a good time to update my predictions. The dividend prediction, it hasn't played out yet, but there's still time. In this video, I'm going to answer, is Facebook still a good investment? And should I sell now or buy more? And now, before we dive in, I'd really appreciate it if you just tap that like button down below. And for my subscribers, thank you very much for sticking around. I really appreciate all the feedback and the support. You can also tap that bell button below to get notifications so you'll see instantly when I put out new research. Alright, so why did I buy Facebook stock? Well, I mainly focus on dividend stocks, so it is a bit odd that I bought shares of Facebook. They don't pay dividends, although I still think there's a solid probability of Facebook paying dividends in the next couple of years. It's a cash flow machine. Looking at Facebook's revenue, it continues to soar. It grew from $2 billion in 2010 to, I think, about $86 billion in 2020. The annual growth has slowed down. As expected, the company is quite big at this point, but it's still up 22% over the past year. Even with constant negative headlines and comments against the company, as well as Mark Zuckerberg, billions of people still use its products. It's a bit ironic that so many people trash talk the company in the online platforms that it's built. On top of that, most of Facebook's services, they're completely free to use. No one has to use them, but they continue to do so because they're some of the most useful platforms around. Facebook literally spends billions of dollars trying to create more useful services. Now, I do have a concern with pressures on the antitrust side. In some areas, Facebook does have a lot of control, and regulators have been pushing on tech giants. Although the old laws from the Sherman Act, I think Clayton Act, etc., they just don't apply too well to free services in our digital world. Nonetheless, I'm sure we're going to see some increased regulation on Facebook's businesses, and when I initially bought into the position, I believed the same at that point as well. But I still have no doubt that the company will continue to grow. The user growth in the US has stalled, but it's still growing in Asia Pacific and the rest of the world. And either way, Facebook is finding better ways to monetize its users here in the US and abroad. In 2020, Facebook made just over $10 per user on average worldwide. This continues to grow and the cash is piling up. I'm going to show you the total cash buildup here soon, along with the potential for dividends. But first, I really want to hit one important point home. If you own a business, small or large, Facebook is one of the best places to find new customers. That's thanks to its huge amounts of user data. It can be one of the most cost-effective places for your advertising spending. The internet has literally changed the business world. And one of my favorite quotes on this end comes from John Wanamaker, a pioneer in advertising. "Half the money I spend on advertising is wasted. The trouble is, I don't know which half." This quote comes from over 100 years ago, and it really shows the drastic change in advertising. Businesses can now track how effective their advertising spend is down to the cent. And a cent today, it's worth a heck of a lot less than it was back then. Facebook has a huge advantage with its user data it collects from its websites and apps. Other mediums such as TV, billboards, radio broadcasts, they simply they're not as effective. And once again, there is a lot of pushback on Facebook. In 2020, we saw big companies boycott Facebook ads. To name a few, I think Verizon, Honda, REI, Microsoft, etc. But as you've already seen, Facebook's revenue still grew over 20% in 2020. Now, why is that? Because Facebook doesn't just serve big businesses, it literally serves millions of small businesses that advertise on its platforms. On top of that, the boycott, it really didn't last long. Facebook is one of the most effective places for businesses to reach customers. Now, on the data security side, Facebook has also made great strides. To be honest, I'd probably trust some of Facebook's services more than certain government agencies that require our info. Either way, Facebook is completely free and you do not have to share any information with the company. But billions of people around the world choose to do so because of the benefits they get from Facebook. Now, let's look at growth opportunities and new technologies. This is where I'm most excited as both a consumer and an investor. Facebook and Mark Zuckerberg, they're not resting on their laurels. The core of the business is advertising, but they're really expanding on many fronts. For example, payment platforms, cryptocurrency, artificial intelligence, e-commerce, gaming, dating, and that's just to name a few. And luckily, all these areas really play nicely with the advertising business, or they will down the road. Facebook has already proven out its ability to advertise. So with all these areas that Facebook is expanding, there's one that I'm most excited about, and that's virtual reality, as well as augmented reality. Now, it's incredibly hard to predict technology shifts, but there is a lot of early momentum and a lot of room to run. Facebook acquired Oculus VR in 2014 for $2.3 billion. Since, the company has launched multiple VR headsets, and its new Quest 2 headset, it has outsold all the others combined. Some estimates put the total number of Quest 1 and 2 headsets sold at close to 3 million units. And that's no number to sneeze at. It's fast approaching 10 million units, and that's a key benchmark. That critical mass will lead to even more developer interest and innovation. This pulls in even more customers, and it really just compounds. I've no doubt that Facebook is losing money on these efforts, but it's playing the long game. There are some big competitors, but really Facebook is the leader in VR and AR. And if the company is able to own market share in the hardware of the future, this can really give it a big leg up. Right now, Facebook is kind of at the mercy of Apple, Google, and some other hardware companies out there. Some outlets report that close to a fifth of Facebook's total workforce is working in AR and VR. I'm optimistic on these forward-looking efforts, but either way, its core advertising business, it's rock solid for investors. The company will continue to drive cash flows higher for investors. Now, to update my Facebook stock forecast, I believe the company will continue to grow, clearly. I wouldn't be surprised to see a $2 trillion market cap in the next few years. Of course, that's barring a market-wide setback. And for a bolder prediction, I'd say Facebook's market cap could reach $5 trillion in the next 10 years if things go well. On the dividend side, I'll stick to my original prediction. I still think there's a solid probability that Facebook will pay dividends in the next few years. There's really a lot of cash piling up, as you can see in this chart. In 2010, cash and cash equivalents came in just below $2 billion. But since, it's climbed well above $60 billion. The company is a cash flow machine and can only reinvest so much wisely. Total debt is also small compared to all this cash. At current valuation, buying back more shares probably wouldn't be as useful for investors. And when it comes to considering dividends, there are really two paths. Will Facebook follow in Google, aka Alphabet's footsteps, and not pay dividends, or in the footsteps of Apple, Microsoft, and most other tech giants? Well, my money is clearly on paying dividends, but either way, the share price appreciation should make it more than enough to hold on to. I don't plan on selling anytime soon or buying more Facebook stock, at least at its current valuation. It's already my largest position and I don't want to overextend. Hopefully you'll subscribe for future updates, and once again, I'd really appreciate it if you just tap that like button down below. Also, I mentioned I invested in Alibaba more recently. I'm down on that position, but I still like its long-term investment potential. You can check out why I invested here, or by looking at recent videos on my YouTube channel. As always, please let me know if you enjoyed this video. I really appreciate any feedback and the continued support. And please let me know if you have any questions. I'll see you next time.